So anyway, my name is Derek Frey. I'm the senior market strategist at FOREX Traders Daily, and totally open session here. Ask any questions, anything market related. I'll go through any live markets you want to go through. I'm not a tick trader, so don't bother with where the market's going in the next 10 ticks because I don't know and I don't care. But if you're looking for swing trades and things like that, I can definitely offer some assistance. My methodology is purely based on the utilization of chaos theory, econophysics, and probability, as well as a little bit of astrophysics thrown in for good measure, and an overall understanding of the universality and the understanding of what are called harmonics, not just in markets, but in all things. Harmonics are a piece of science. They're not something that has anything to do with the markets. The markets conform to it because they conform to the laws of science. It's circumstantial. It's not the other way around. But anyway, so my method is very different, and I get accused of many things, and I love all of it. And because at the end of the day, I'm usually doing pretty well. So let me just go through my newsletter here. This is going to be posted up on the website, and as soon as I'm done with this session. So just it's in its word form. This is how I write it. But normally, of course, you guys are probably used to seeing it on the web at FOREX Traders Daily. But so anyway, we're knee deep into these doldrums for the summer. We've seen a slow start to hurricane season. Markets are obviously making some serious waves where the hurricanes have yet to. As I was saying earlier, we've already had a really great summer. We're up over 3,000 pips for this since June 1st. Events continue to unfold much as forecasted. It's been pretty easy to forecast. Remember, forecasting is not predicting. Nobody can predict the future, but we can forecast probability quite well, thank you. So anyway, Euro-US. We will look to begin covering the shorts that we've been looking for some near-term strength in this pair, strengths that we will want to sell into more than buy. Overall, we're looking for this pair to move back towards $1.25 by year's end, if not sooner, or by early 2010, let's say. But near term, I actually am going to be a buyer. In fact, I was looking at buying it right now. Hang on a second, I got to check something. Oh, that's very nice. Okay. Sorry. Okay, so let me get back. Okay, cable. This pair is also likely to see some rather violent bounces this week. We're looking to also cover shorts here that were taken above 65, anywhere from 165 to 170. Shorts all over the place up there. As this pair spikes back up, we will again look to sell into these rallies, obviously. We want to buy dollars on dips because nobody else wants to. Suckers are always wrong. Dollar Swiss. As I mentioned, this pair would move from below 107 to back above 110. We're now about halfway there. I'm seeing signs that the second half of this wave is going to be a little harder to surf through than the first half was. So we want to use extra caution, and therefore we've actually already exited this trade for plus 124 pips this morning. Looking to put it back on a dip below 108 though, so we'll keep our eyes peeled for that. Or maybe even 107.50 or something. I'm not sure exactly where we'll put it back on or if, but we'll cross those bridges when we get to them. Dollar yen. This is the one pair I've mentioned in the past that will not move according to the dollar at all, but will follow what the S&P tells it to do, like a slick, We have seen this pair turn down with stocks and expect that relationship to continue for at least the near term. We're looking for a bounce early this week in stocks, but once again, we want to sell into that rally and be patient. Stocks as well as this pair are going much lower. Don't be another moron who drinks the Kool-Aid. This pair has been slower to respond. The Aussie now, dollar strength is, this has been slower to respond to dollar strength over the last, however, over the next few weeks, you will see this go from laddered back to leader. Not saying absolute leader, but it will it will play catch up, is what I'm basically saying. And then for the CAD, for the Canadian, this pair is also looking for a strong move back up. We are, I should say, and have been buyers of dips here in this pair, especially these dips down into the single digits. And we'll continue to be so all the way up to 120, which is where we expect to find this pair by year's end. So that's kind of a longer term projection. That's kind of my end of the summer, looking into the fall projections from a more macro point of view. I'm not trying to say any of these things are going to go there in a straight line. I'm not stupid. It's going to be a typical, 2 steps forward, 1 step back, 2 steps backwards, 1 step forward, sometimes, whatever. But it's going to be a pretty herky-jerky move. I expect it to be long periods of confusion followed by short periods of panic in both directions. And that's going to be the theme for the remainder of the year. Stocks continue to be going through this distribution phase, and we've all but completed it now. So, it's really just a question of when distribution is completed and this thing goes back into, it's, something closer to real value. All right, so what charts do you guys want to look at? What do you want to take a gander at? Here's the Aussie. And you can see that we are down here testing a major support level. I would not want to be going short down here. I want to be looking more at longs. You just broke out to the downside. Why in God's name would you go short on a breakout? Right? Who does that? I'm serious. Who does that? Why would you go short here? What's the statistical probability of this thing following through to the downside now that it's broken out? Is it more or less than 50%? Yeah, it's only 30%. That's right. It's not even that, actually. That's a generous number. So anyway, the euro itself, sure, we can look at that. Obviously, I want to be a buyer down here. You can see that my chart's pretty, I was using this in my trading room this morning to show the bounded range. All right. You see a euro chart? This is just all the different ranges that we've been maintaining. And we're now retesting, I was showing this in my room this morning, we're now retesting the lower end of a much larger bounded range. So again, macro probability is on our side. So we want to use that as a place to exit shorts and consider going long. But if we go long, our trades are going to be much smaller because we don't know, but we now suspect that there's more pressure to the downside than upside potential. So any long trades we take will be very small. Any short trades we take will be large. Not large, but relative to these would be larger. Yeah, I would agree, trader. If we could see a spike down into below, into the low 140s, it would be great. Even a breach of 140, something in the 139, something get a 139.80 print or something like that. That would be fantastic. Then I'd really want to go long, because then we would have washed out a whole bunch of suckers. So that's what I'm waiting for, because I'm not in it yet. I'm still being patient with that thing. I will only buy a market that's in a free fall, and I will only sell a market that's shooting to the moon. I will never buy a market that's going up, and I will never sell a market that's going down. Ever. Ever. Because I like to make money. I didn't make 3,000 pips in the last 10 weeks by buying high and selling low. Anyway. I don't know if the corrections do. I don't know or care. I don't have an opinion about markets. I only have understanding of probability and what's most likely. That's it. I don't do opinions. I do evidence. And the evidence tells us that there's more probability that this particular market will go up than down. I'm not saying it's going higher. I'm saying it's more probable to go up. There's a fundamental difference in the way that one approaches that idea. I don't know where the market's going, and neither do you, and neither does anybody else on this earth, unless they're psychotic and they live in a rubber room. No one knows the future. It's not possible. We can't forecast events. We can't forecast the future. But we can predict when predictability is most likely to be predictable. And that's not just a fancy play on words. It's actually a very simple, elegant way of using some very basic math. Oh, today's not another Black Monday. Why? Is somebody saying that? Are we getting headlines like that? Crossing the wires? That would be great if we are. I mean, how is anybody Jack, you've been listening to my webinars now for a while. Come on, how are you surprised by this? Anybody who's been listening to me for any period of time, if you're still buying long up here, why are you still listening to me? Why are you still here? How are you still here? understand. Is the Dow down a lot? It's down like 180 points. That's nothing. That's not even a blink. Call me when it drops to 1,000 in a minute, or in 5 minutes or less. Then you'll have my attention. But this is nothing. It's a joke. It's just a normal down move. And it's going to bounce here anyway. It doesn't matter. We're going to bring more suckers in. These are the most probable energy cycles within the S&P 500 on a 15, 5, and 2-minute basis. This is nothing. This is an experiment. Don't look at it. But these three are working. And these are the predominant energy cycles. Sure, if you want to, Jack. How does that make you any money, though? How does that matter? Seriously, how does that matter? If you want it to be a downtrend, it's a downtrend. If you want it to be an uptrend, it's an uptrend. And I'm not being a jerk. I'm being serious. How does that matter? How is that going to make you money on your next trade? Or the one after that, or the one after that, or the one after that, or the one after that? I'm not trying to be a jerk. I'm trying to point something out, and I'm glad that you're willing to be the the fall guy for it. But you understand where I'm going with this? What does that matter? Someone explain to me how that is going to make you money. Because can you definitively say one or the other ever? Can you? Can anyone with absolute certainty, or even 98% certainty, I'll give you 3 standard deviations, 3 sigmas on the stupid normal bell curve, which is not applicable in the first place, but whatever. So let's pretend for a second it is. Let's say I can, with 98% accuracy or certainty, tell you that it's one way or the other, trending up or down. How is that going to make you money on your next trade? How? Are you just going to go long if I tell you it's an uptrend? That doesn't mean you're going to make money. Do you understand what I'm saying? This idea that people need to know what the trend is asinine. It's BS. It's mindless. It's meaningless. The trend is not your friend. The trend is anything you want it to be. The trend is the friend of the losers who like to say crap with hindsight. In real time, it makes you absolutely zero money to know what the trend is. To think you know what the trend is, because the reality is you can't know. It's not possible to know, because it's all things at the same time. The very idea of the concept of a trend itself is fractal in nature. A trend is a fractal. That means it exists on multiple scales and levels, and it's self-similar, but it doesn't have to be the same. So you can have an uptrend within you do have uptrends within downtrends, within uptrends, within downtrends, within uptrends, within downtrends, all relative to the period of time in which you are viewing the data. So if you view the data on a 15-minute basis, it could show you an uptrend. If you view it on a daily, it could show you a downtrend. If you view it in a tick chart, it could show you whatever. You understand? It has no bearing. Anybody who thinks the trend matters is losing. Period. The trend doesn't make you money, people. The trend makes you a monkey chasing after, or a rabbit chasing down rabbit holes. Because every time you lose, I can turn around and say, well, you were fighting the trend. Because I can always show the opposite of what you were doing. Anyone can. Do you understand that? It's total BS. You guys get this, right? Anybody not believe me? Anybody want to argue this point? Please. You guys can't all accept this. There's 50 people in here. There's no way you all accept what I just said. Because at least 48 of you are trend traders. So come on, let's hear it. Oh, I've already told you what makes money. Probability and risk to reward. Nothing more, nothing less. A healthy blend of probability and risk to reward. That's it. There is nothing else. I don't follow news. I don't follow events. I don't know anything about the European economy. I don't know anything about any of the economies that I trade. I don't want to know. I don't read central bank statements. I don't even know who runs the central bank except for bumbling Ben, only because he's a reckless printing press operator. What else? Probability is an absolutely mind-numbingly simple calculation to do. All you have to do is understand what the market is. It is a nonlinear dynamic system. Then all you have to do is look up what is the probability inherent in any nonlinear dynamic system. And that tells you everything you need to know. Everything.
That's all I did. That's all I do. Markets are a nonlinear dynamic system. Calculate probability on non-market related nonlinear dynamic system data so that you verify it outside of the silly markets and you see that it's not BS, and then you have something. That's how you work out probability. And it's always the same. I don't sit here and crunch numbers at all. I have a half broken down calculator and a semi-mentally handicapped mind. So, I mean, there's no way I'm pumping out hardcore equations here. Well, but anyway. So anyway, ask yourself this, Jack. How often does any market trend? This is my point about why you don't need to know the stupid trend. Total meaningless crap, by the way. Why don't you need to know the trend? In fact, why is it more detrimental to your success if you think you know what the trend is? I'll go that far out on it. If you believe that you know what the trend is, I guarantee you that you have a statistically worse chance of ever making money than if you admit, like I do, that you don't have a clue what it is or care. I guarantee it, and I'll stack my results against anybody, and mine are public, by the way, because I do it in a public trading room live. So I'm not making this up. I'm not whatever. This is 1,000% verifiable. If you want my signals, you can buy them. So, you know, whatever. But, and I'm not trying to push them. I don't care. I don't need people to do it. I'm doing quite well on my own, thank you. But if you don't believe me, I'm saying you can. You can verify that I'm not just blowing smoke up somebody's, anyway. So what percentage of the time does any nonlinear data, any dynamic nonlinear data, now we can expand it beyond markets, what percentage of the time does any nonlinear dynamical data trend? Remember, we're not just talking about markets now. You can talk about weather. You can talk about, pick a nonlinear domain. It doesn't matter. It trends 100% of the time in different directions and on different scales. I like it. That's awesome. That is awesome. That's the best answer yet. I'm using that answer from now on. I love it. Yeah, the answer is between 15 and 30% if you want to get technical about it. 30%, most 30% of the time, any nonlinear dynamic system can trend. At most. Most of the time, it's sub 20%. But anyway. So it's just a bad bet, people. It's just a bad bet. So if you think you know what the trend is and you're betting based on what the trend is, you are statistically putting yourself in a place that your only possibility of being right is about 30%. So if that's good enough odds for you to be happy with, then more power to you. But I personally like to turn that statistic on its head and use the 70% instead of the 30. For my money. Call me crazy, you know? I don't know. If the Dow drops, people buy the dollar on average. Oh, I don't know. I don't care about that. That's another waste of time of trying to guess what people are going to do. People are always going to act out of fear. What's a more powerful emotion? The desire for something more or the desire to protect what you already have? What's a more powerful emotion? Everyone answer this. Come on. Protecting what you already have or the desire for more? Which one's more powerful? Which one will people do more for? Statistically speaking, again, this is not talking about markets. I'm talking about human sociology in general. This has nothing to do with markets. Nothing. Go look this up. This isn't something that I made up, people. Go look it up. I don't make anything up. I don't have to. I don't have to make this stuff up. I actually do my homework. Go look it up. Somebody give me a source so that we know we're not just talking out of our backsides here. Come on. Global population sociology. Across all races, creeds, religions, whatever. Across everything. It crosses all boundaries. It makes no difference. There is no difference in the fundamental human animal between the stupid little things that we like to think are different about us. But our responses to stimuli are absolutely biologically the same. You are correct. It's fear. The fear of loss is greater than the desire for gain, always. Always. That is the fundamental baseline of human decision making. Always. It's what we do. We are more afraid of losing than we are greedy for winning. And that is how we get beat every single time. That is why 98% of people lose. Because that is a fundamentally wrong way to be approaching it when you're looking at this stuff. Or giving into that the way the emotion flows through you during those moments is fundamentally wrong. Because your emotions will tell you to do the exact wrong thing at the exact wrong time. I'm not saying you want to fade your emotions. This is not, Seinfeld where you go into opposite George mode or anything like that, okay? So, anyway. Oh, I didn't buy Euro yet. I haven't bought it yet. I just looked at it. I bought some other stuff, but I didn't buy the Euro yet. I don't know where it'll go. I don't predict the future. I use trailing stops, and when it gets up there, when it goes, wherever it goes to, my stops will take me out. I suspect it can get back to 43, yes. Am I using that as a hard target? Absolutely not. But it may only bounce here to 41.50 or something. It may not have a lot of upside energy in it. It's being pressed fairly heavily here, and it's burning through some upside energy that it should have right now. I'm not in it because it should be further. The fact that it hasn't had a response to this up curvature in the energy cycle means that the downward pressure from a more macro energy cycle is exerting a greater force or pressure. This is all the laws of physics, by the way, than the more micro wave that I was timing or looking at for an entry point, or for an entry/exit point. That's all. We're literally comparing the magnitude of energy waves. And I know it sounds crazy, but it works. Yeah, you heard what my target is. My target's $1.25 by the end of the year. Or so. I'm not saying exactly by New Year's morning or something, but, whatever. Somewhere early 2010 or so, we should see $1.25 again on the euro. At which point you want to buy it with both hands, like a drunken sailor. But until then, you got to be a seller of rallies, more than a buyer of dip. Path of least resistance is pointing lower. Look at this chart on a very simplistic level. I'll leave you. Oh wait, what time is it? Oh, I don't have to. I got to wrap it up in about 5 minutes. So, just look at this. Let me get a new chart. I cannot stand that guy. Ugh. Okay. Ask yourself this question always when thinking about a market. Look at it like this. Nothing. Don't put any crap on your charts. And just look at it clean. Where are there more orders at this time? Are they above current prices? Not current, but above recent highs up here, or below recent lows down here? Where are there more orders? You don't need any inside information to do this. You just need a brain and 2 seconds of clarity. Seriously. All right? So where are there more orders? Above or below? Let's get more answers than one. Come on. Think about it. What are the masses doing? What are the headlines? What is everybody being told? That the dollar is getting destroyed. Right? Everyone's being told that the dollar is going to zero, right? So that means that the public, by and large, is going long everything against the dollar, which would include the euro. So if they're going long, where do they run their stops? Below the market. So there's more orders below the market than above. The orders are always on the side, the opposite side of whatever the public's doing. The masses, the herd. So if there's more orders to below the market than there are above it, and we know that the market is a living, breathing entity, that its only food source is orders themselves, and we know just like a hungry lion on the African savanna, it moves towards the herd, or always stays near the herd, and of course takes out the weakest members of the herd at all times, which the weakest members of the herd in trading are the people using the most leverage. The more leverage you use, the more of a broken-legged gazelle you are. Period. And there are no exceptions to that rule or points for second place. If you're using above 10-to-1 leverage, thank you for giving me your money. You will lose. And you will lose to somebody like me. And I am not taking your money, by the way. You are giving it to me by using that much leverage. I don't take anybody's money. I just put my hand out and you give it to me because you're using too much leverage. Thanks for playing. So anyway, that's how the market actually works. And so if we know that there's more orders below the market, we know that the market is going to move towards the herd, because markets always move in the direction that hurts the most people. And therefore, we know that the path of least resistance is below us now, not above us. So that tells us we want to be a seller of rallies, not a buyer of dips, right? Do you understand how the thought process evolves through this? It's very simple. You see, I didn't put any indicators up here. I didn't use anything. I don't need anything. All I need to do is pay a slight bit of attention to what most people are saying and doing, and knowing that 98% of them are wrong, right? You see how incredibly simple trading really is? I mean, this is not hard. It's just common sense. People try to make it hard because they think that economics matters and they think that all these other things matter, and that's great. Sure, they do on certain levels of the fractal, they do. But not for the levels that we trade. Not unless you're an investor. Economics only matters for investors. Traders have no business understanding economics or using it because it doesn't matter. This is not a contrarian view. This is the statistically true point of view. And I have the numbers to back it up. I'll show you all the math. This is the reality of any nonlinear dynamic domain, which the market is. Therefore, it complies to those rules. It's just that simple. The laws of physics and the laws of nature cannot be broken. They can be stretched. They can be abused and tested, but they will not be broken. So the bulk of the orders are below the market, obviously. Make sense? Am I clear? Questions? I think I need to wrap up here. So I throw a lot of stuff at you guys. I know that, and I know people, especially new people, think it's contrarian and all that, and that's cool. I'm not offended by the word contrarian, but I'm not a contrarian. I'm a contrarian to lack of doing homework. I'm a contrarian to believing the hype. I'm a contrarian to listening to the crowd, I guess. But why would anybody want to listen to the crowd? They're 98% of the time they're wrong. So why would I do that? I'd have to be a crazy person. Where do you get that, Jack? In 1.4 straight, 140 and 142. I'm not saying it's wrong. I'm just curious, where do you get the data? I would say those are basically the points where the range exists. The predominant range exists there, so obviously the order flow would be there. But are you getting that from a source, or are you getting that from just your own technicals? And again, I don't care the answer. I'm just curious. But don't read anything. Annie, you're asking a good question. What can you read that will help us? Don't read any books that were written prior to 1900. I'm dead serious about the markets. Only read trading books that were written in the 17 and 1800s. There's plenty of them to choose from. I spent about 4 years when I was 26 to about 30 reading only books written prior to 1900. Don't read anything new. Read the old stuff first, and then when you read the new stuff, you'll realize there's no such thing as the word new. There's only rediscovered and forgotten. Is it? Oh, you're talking about right in here, huh? I see. You see how the energy wave is waning? You see how it's become exhausted again up here? I think there will be one more spike, actually, now that I look at it from this daily chart. I wouldn't be surprised to see a 145 print before this thing truly rolls, because we would like to see... It's nice that we did have a higher high here, though. That increases probability that we'll get a reversal. But it would be nicer if we had more wickish action like we saw in other reversals than we've yet seen here. So I would prefer a bigger wick. But we don't always get what we want, do we? So, but because it's not there, it makes me a little cautious. So there's still a good chance that we could have a fast and furious run. Like this S&P, I think, could still run back to about 1,000, and before it, and retest. In fact, I think it should run back to 1,000. Maybe not today, but this week, and but probably today or tomorrow at the latest, and retest that level. There's no such thing as stop hunting. That's a myth created by silly people, and I'm dead serious. And I'm being very politically correct today. Boy, for me. You regulars know what I'm talking about. I can't stand being politically correct. It makes me sick to my stomach, actually. It disgusts me. But we do things for work that we wouldn't do in real life, so whatever. What do you mean my next webinar, Carrie? I don't have any more today. My next one is my trading room tomorrow morning at 8:30 in the morning, Eastern. And then I have another one here on FX Street at 1:30, but that's for premium members tomorrow, I think. And then Wednesday I'm back here at 1 o'clock with regular for everybody. But every morning, Monday through Friday, I have my trading room at 8 to 8:30. If that's what you're asking, I don't know. I'm not sure which one you were asking about. Yeah, we're going to dip 975, and then we might get this pushed back. Should get the pushback. Political correctness is for people with no backbone, but I'm trying to be nice, so I'll pretend I'm a fish, or I mean a snake. But anyway, any other market questions? Anything else? No? Yeah. No. I just trade the majors. Crosses are also for losers. Velocity and success are inversely correlated. You know who chases after the stupid markets that move 300 pips in 2 seconds for no reason? The losers, the people who are down. People who are up 3,000 pips like I am, or 1,000 this month, whatever, we don't do that. Because we're not crazy. The losers do that crap. But the winners, we don't have to. We can trade anything, because it doesn't matter what we trade. It's circumstantial that I trade currencies. I trade stocks, I trade currencies. I don't really like to trade stocks, but I trade mostly commodities and currencies. It doesn't matter. I'll trade anything. It makes no difference, because I'm not trading a market. I'm trading a method. Fundamental difference. I don't care what the underlying market is. I could trade the stupid Canadian against the shekel if I wanted to, but why would I do that? You know what I mean? It makes no sense. Liquidity is so low. There's only, 6 guys that trade that thing? There's no point. And you never want to be a big fish in a small pond. You always want to be a small fish in a big pond when in trading, okay? So you never want to be a big fish ever in trading, or at least you never want to be perceived as one, because big fish get hunted. And I don't mean stop hunted. I mean a whole different ball game. So we never want to put ourselves out there and be foolish. And not that anybody could even become a big fish, even with a few $1 million in accounts for nothing. But still, it's just velocity. The easiest way I can explain it is this. Okay, let me give you a real world example. All right. Who do you think is going to live longer? 2 men or women, makes no difference. 2 humans. Okay, all do everything exactly the same in their lives. Everything. Every single thing. They're identical twins, and they do everything the same. They fart at the same time. They burp at the same time. They scratch their butt at the same time. Everything, right? Okay? But they do one thing different. One of them drives their car at 200 miles an hour, and one of them drives their car at 50 miles an hour. Who's going to live longer? Statistically speaking, who's going to live longer? So why, in God's name, if that's such an easy example, would people, and it is an easy example, why do people go after the fastest moving markets and think that they're going to live? It's inversely correlated to intelligence, frankly. Obviously, you wouldn't drive your car at 200 miles an hour and expect to live. But people try to drive their accounts at 4,000 and think they're going to live. Not only do they think they're going to live, they think they're going to win. Talk about delusional. So anyway, just keep that one in mind next time you feel like, trading 20-to-1 leverage or something crazy. All right, guys, I'm going to wrap it up. Be safe. The race is not to the swift, but to those who keep on running. Be safe, and I will see some of you back here, I guess, later on this week. And ForexTradersDaily.com is the website that I'm on right now. I have a trading room. I have an online trading room, like I said, and I have a mentoring service as well, where I teach people the very method that I use that has allowed me to generate the numbers that I've been saying here, the 3,000 pips so far this summer. I mean, and I'm up, I don't even know how much for the year. I mean, it's not like it's just the summer that's good. If you want to go back as far back as you want to go with the numbers that we have, you can take it as far back as you want. There's definitely losses, but overall we do very well, and I think we're up to 6 or 7, somewhere between 5 and 7,000 for the year so far. I really don't know. I don't keep macro track of it all. Somebody else does that. So anyway, that's what I do. Yeah, if you want to get more info, I'll pull up the site, I guess. My newsletter will be posted here in about a half an hour. This is last week's, or a couple weeks ago. So anyway, and you can get more info on the trading room and all that stuff in here. And if not, you can always email me, DerekF@ForexTradersDaily.com. So, or you can leave a comment if you need to reach me that way. That I get those comments as well. Anyway, guys, thanks for your attention. Thanks for your questions. Good luck. Be safe. Don't believe the hype.